CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Joining us on the Crypto Corner now is Vineet Budki from Sigma. Vineet, hi, thank you so much for joining in. And the way we're looking at the markets, it really seems to be behaving like any other asset class. After the US Fed meeting is done and we have expected result in hand, there is some profit taking that we've seen across cryptos as well, as has been the case with some other asset classes. How would you read cryptos? Is it like any other asset class? Is it a safe haven, the kind of buoyancy that we've seen in cryptos in this year? What is your reading into it?
So my reading on it mostly is, when we buy a house, we don't go to a realtor every day to look at prices. But in crypto, a single day of 5% drop and suddenly everyone thinks it's all changed. I don't think we should look at daily prices on over a 4-year period. It's just like investing in a Web2 startup. You have to look at it over a 8-year or a 10-year period. But when it comes to crypto, I think more than price speculation, it is all about understanding what cryptos represent. Today, 95% of people don't understand what a Bitcoin or what a Ethereum represents. And I would say we should talk more about it, where, we should understand that Bitcoin is a store of value like gold or any of these assets like house, while Ethereum and Solanas of the world are companies which are trying to change the way we interact and transact. These are startups which we are investing in. And then you have the stable coins, which basically are a way people save money. In India, if you remember as kids, whenever we made a lakh rupees, mom, dad would say always put it on FD so that you can save yourself against inflation. But today with the currency depreciating, stable coins become interesting. And then, you have the meme coins, the Wolf of Wall Street, penny stocks that Jordan Belfort ran. Again, people don't understand these 4 categories and just look at price. They think it's a magic coin. These ups and downs happen. If you look at the last 10 years, September and August and September have been negative months, and the next 2 months have been big green months. But again, look at utility and not just price action, because price always doesn't reflect value.
All right. Vineet, when you look at the longer term as well, and we look at volatility, which really seems to be maturing at this point in time, there are better understandings of the market. Actually, our latest data also shows that nearly 180 public companies are now invested in some sense in case of cryptos as well. How are you looking at the institutional adoption side of this?
Again, I have had this discussion with a lot of people globally, in the US specifically, where they say institutional adoption will make this market more mature. But when we look at numbers, as of today, the whole stock market is in this whole stock market, which means New York Stock Exchange and Bombay Stock Exchange. There's a small company known as Google, which is worth $4 trillion. And the whole crypto market is $4 trillion market. So, it's actually not even matured. When you look at these institutional buys, it's only 4% or 5% when it comes to treasury companies that hold Bitcoin stocks. So I think it's still very early in this whole space. We haven't seen real mass adoption, and this volatility will continue. When people say every 4 years, so if you look at the cycle in the last 10 years, you had a 80% drop on the first cycle, you had a 76 and a 74% drop between a December of this year and a January 13 months later. So I think institutional adoption has come, but has it come to that scale where volatility will go away? I don't think so. We will definitely have a 150K, 200 Bitcoin. We will have $1 million Bitcoin over the next 10 years, but we will also have a 60 to 70% correction in the coming 2 years.
All right. That is having head on your shoulders there. Vineet, also, this is also an ongoing conversation on how much of crypto should you have on your portfolio. What is your advice to people who already are invested, and then people who want to start into this? Is it too late? Is it the right time? What would you say to them?
Again, as I said, I was telling you about the numbers about, stock markets being so big, and, Apple being one of the companies at 4 trillion, and the whole crypto is 4 trillion. It's so early in this segment. And even when you look at adoption numbers, Crypto.com came up with a report that there are 500 million wallets. If I assume one wallet is one person, that is less than 5% of the world population. This has not even started. And these 500 million wallets are the ones, 90% of these guys wake up in the morning to see Bitcoin price. They do not understand the real utility of crypto. They have not used Bitcoin to store any value. They have not used USDT to actually earn a 5% yield. So I think it's too early, but the real thing is about finding the real value. You cannot just end up investing in Shiba Inus and Doges, but you need to find the Teslas and the Googles of the world. So it's very early. I started 5 years back. I had a great run, and I think still too early.
I get your point there. Well, a lot of people that I have been talking to also say that these are still infancy years when you talk about the crypto as a segment here. Having said that, I mean, I do get your point that a lot of people do not understand the use cases, but there are some who do, and that perhaps is a very, very niche crowd right now. What is your sense on how much for people who want to start right now? Vineet, let's agree to the fact that it would be a starting somewhere, and somewhere means starting investing to it, starting getting a feel of it, and then looking at technology and various miracles that it can perhaps perform. But for people who are just starting into this, what would you advise to them?
So what I would advise to people is rather than looking at green and red candles, start understanding the utility what these tokens get. So, when I talk about, say, ICICI Bank today has $60 billion in deposit and is worth a $120 billion market cap company. Now, when you look at Aave, which is again a bank on smart contract, it has close to $70 billion of deposits, and it's valued at $2 billion, like 1 by 60th probably of the price of ICICI. So the point is about understanding what utility it brings. We all know about Aadhaar card and how the government took biometrics and made it an Aadhaar card which is connected to a bank account to verify identity. But we don't know about WorldCoin, which has been built by Sam Altman, the father of AI currently, and it is doing the same identity solution. So what I'm explaining to people is that you need to first understand what these things do and what is the final adoption parameter of it, and then invest in it and not just randomly take advice on YouTube channels and buy tokens. So I would say learn more, get to meet a lot more founders, go to events globally, because we are very early. We are in the 1980s of Indian stock market where people clearly don't understand what a token represents. We would have our scams of Harshad Mehta and Ketan Parekh that would come along, but we would have people like Dhirubhai Ambani who actually build up Reliances, because these are the founders that one should back it up. So I would say go out, meet more people, understand this industry more, and understand utility and adoption.
Vineet Budki, really pleasure having you on the show here. Hope we speak again. And that, of course, is how you should be looking at crypto as an asset class. Early days, and this is perhaps one of the best times you should get into this crypto as an asset class as well. But with that, it's time for a short break. We'll get you more on the markets on the other side.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.